Jane Street offered Rs 4.3 crore package to IIT Madras student before Sebi crackdown. Jane Street salary global trading firm Jane Street Group LLC, which has been barred by markets regulator Sebi for allegedly executing a large-scale manipulation strategy in India's derivatives market through sophisticated algorithmic trading, had earlier offered a jaw-dropping Rs 4.3 crore annual package to a student from the Indian Institute of Technology IIT Madras. The Jane Street pre-placement offer, during the last IIT Madras placement season, made headlines in December 2024 as it was the highest package during the season. The Rs 4.3 crore offer reflects Jane Street's high-stakes trading environment and its need for individuals with advanced skills in mathematics, programming, and real-time decision-making. Jane Street's interview process often includes multiple rounds of quantitative problem-solving, coding challenges, and probability puzzles, all aimed at testing raw mental agility. Jane Street is known globally for its lucrative compensation packages and its famously rigorous hiring process. According to Economic Times, the firm routinely recruits from Ivy League and top-tier global universities including MIT, Harvard, Cambridge, Oxford, Stanford, and Princeton. India, with its rich pool of mathematical and engineering talent, particularly from IITs, has increasingly featured on its recruitment radar. Why is India a growing priority for global quant firms? India's growing prominence as one of the world's 5 largest equity markets has made it a strategic focus for global proprietary trading houses. Firms like Jane Street have expanded operations in the country to tap into both the local talent pool and the rapidly growing derivatives market on the National Stock Exchange NSE, one of the world's busiest options markets by volume. Also read explained what is Jane Street, how it earned 36,500 rupees CR from FO trades in India, why has Sebi bandit Jane Street operated in India through its associate firms JSI Investments Pvt Ltd and JSI2 Investments Pvt Ltd. Until recently, it maintained a low public profile despite its deep involvement in quantitative trading strategies in Indian markets. Jane Street banned. The Securities and Exchange Board of India SEBI issued a 105-page interim order dated July 3, imposing severe restrictions on Jane Street's entities in India. The regulator said the entities engaged in a manipulative trading strategy involving the deliberate misuse of index options and futures to generate unlawful profits worth 4,843.57 rupees crore. Sebi accused Jane Street's entities of making 43,289 rupees crore in profits from options while deliberately booking 7,208 rupees crore in losses through futures and equities, a method seen as distorting the integrity of the market. The total notional impact of the alleged scheme stood at 36,500 rupees crore. The order directed Jane Street's entities to deposit the alleged illegal gains in an escrow account with a lien in SEBI's favor. The regulator also froze their bank, demat, and custodial accounts, with instructions to block all debits unless cleared by SEBI. Jane Street manipulation: how it earned 36,500 rupees crore by gaming Indian markets. Between January 2023 and March 2025, Jane Street entities made over 43,289 rupees crore in profits from index options, particularly Bank Nifty using various strategies that allegedly manipulated markets. These profits were partly offset by losses in other segments like stock futures and cash equity, resulting in a net gain of 36,502 rupees crore. In a 105-page order, Sebi highlighted 2 key manipulative strategies: intraday index manipulation strategy and extended marking the close strategy. Point 1. Intraday index manipulation strategy, citing an example of January 17, 2024, when Jane Street made its biggest single-day profit of 734.93 rupees crore. Sebi said Jane Street aggressively bought stocks in the Bank Nifty index like ICICI Bank, Axis Bank, HDFC Bank in the cash and futures markets in the morning session. This artificially pushed the index higher. Simultaneously, it built large short positions in Bank Nifty options by selling call options at inflated premiums, and buying put options at lower prices. Later in the day, Jane Street sold off those same stocks, causing the index to drop. This boosted the value of their put options and rendered call options worthless, ensuring massive profits. Point 2. Extended marking the close strategy on certain expiry days. Jane Street allegedly manipulated prices in the last 2 hours or near the market close, a crucial window for settling FO contracts. Jane Street reacts. Jane Street, in response to the allegations, has pushed back. In an email statement to Reuters, the firm said Jane Street is committed to operating in compliance with all regulations in every region where we operate globally. We dispute the findings of the SEBI interim order and will continue to engage with the regulator. The case remains under detailed investigation. SEBI's interim order currently bars Jane Street entities from buying, selling, or dealing in securities directly or indirectly on Indian exchanges. What is Jane Street? Swipe left for next video. Founded in 2000, Jane Street is one of the largest proprietary trading firms in the world. The company trades more than 17 trillion annually across asset classes, including equities, ETFs, bonds, options, and crypto. Its global operations span New York, London, Amsterdam, Singapore, and Hong Kong. Despite its global scale, Jane Street is famously metiashy and rarely makes public appearances. Its influence, however, is vast, from being a major liquidity provider in global ETF markets to actively participating in high-frequency trading and arbitrage strategies. Latest blogs.